Since we are following straight line method, the amount of depreciation remains same for all the years. There are two parties in hire purchase agreement, that is hire purchaser as well as hire seller. Recording of date is also very important because here the payment is made in the form of installment along with interest. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Today we are in the last session, that is 8th session of Unit 3, Hire Purchase. So my dear students, your Unit 3 is all about hire purchase and we have solved a number of problems relating to hire purchase system. Now we shall quickly recall what we have discussed in a previous session. So in a previous session, we had solved a problem on hire purchase system where cash price of the asset is not given. So, you know there are two parties in hire purchase agreement, that is hire purchaser as well as hire seller. So, differently we have to prepare accounts in the books of hire purchaser as well as in the books of hire seller. Hope you all remember the journal entry in the books of hire purchaser as well as hire seller. So these two parties are totally different and the journal entry is also different. At the same time, we learned how we are going to prepare accounts, that is ledger accounts in the books of both the parties. In today's session, we shall solve a very important problem, that is question paper problem. 15 marks question paper problem. Very easy problem. Only thing is that you have to know the journal entry. If you know the journal entry properly, then it is easy to record the entries both in journal as well as posting of entries in ledger also will become very easy. Now go through the problem here. Srimati Manjula purchased a car. Now who is hire purchaser? Srimati Manjula. So Manjula is a hire purchaser. So she purchased a car on 1/1/2012. So as I told, recording of date is also very important because here the payment is made in the form of installment along with interest. So this date is very important. So they have purchased a car on 1/1/2012 on hire purchase system. The cash price of the car is rupees 4,40,000. So they have, what is the total cash price of the car? 4,40,000. Payable rupees 80,000 down and 3 installment of rupees 1,60,000. That is, your first installment is 1,60,000, second is 1,20,000 and third installment is 80,000. Now what is the total cash price of the car? That is, they have given 4,40,000. Out of which they have paid 80,000 as down payment. Now they have paid 80,000 as down payment and remaining amount will be paid in 3 installments. How much? First installment is 1,60,000 and second installment is 1,20,000 and third installment is how much? 80,000. So this is how they made the payment of rupees 4,40,000. Now what the other information they have given? Interest is charged at 9%. So what do you mean by interest is charged at 9%? So here on the date of delivery, here the hire purchaser will make some amount or pay some amount which is known as what? Down payment. In this problem, 80,000 is down payment. Rest of the amount which has to be paid, so it has to be paid in the form of installment along with interest. So here interest they have given 9% and depreciation is charged on straight line method at 10% per annum. So here depreciation should also be charged on the asset. What is the percentage of depreciation? 10%. Prepare necessary journal entry in the books of Srimati Manjula. So here, who is Manjula? She is a hire purchaser. So we have to prepare necessary journal entries in the books of hire purchaser. Now clear about the problem? Yes. Now we shall prepare a table regarding the calculation of principal, interest, installment and depreciation. So if you know how to calculate or how to prepare this table, it is very easy to record entries in the books of both purchaser as well as seller. So all the amount will be in this table itself. Only thing is that you have to put that amount to the journal entries and you have to know the journal entries properly and all the amount will be there in this particular table. Now how to begin this? So you know date, particulars, amount, principal, interest, installment and depreciation. So these are the columns to be drawn. Now when did the hire purchaser purchase the asset? That is Manjula purchased the asset on 1/1/2012. So write that date 1/1/2012. What is the cash price of the asset? Here they have given directly. So the cash price of the asset is 4,40,000. So write the cash price 4,40,000. Next, on the date of delivery, he has made or she has made the down payment, right? So what is the down payment she has made? So here they have given payable rupees 80,000 down. It's nothing but what? So when she purchased a car, that is on 1/1/2012, so the car price is 4,40,000, but she has not paid 4,40,000, but she has paid how much? 80,000 on the date of delivery of the car, which is known as what? Down payment. Now how much down payment? Less down payment 80,000. Then what is the total amount to be paid to the hired seller? So 4,40,000 minus 80,000, so we'll get 3,60,000. Now this 3,60,000 will be paid by the hire purchaser, that is Manjula, in 3 installment. They have given 3 installment amount, right? So it has to be paid in 3 installment. Now at the end of first year, that is end of every year, they are going to make the installment amount. Now we shall take the first installment. So first they have purchased on 1/1/2012. So end of 2012 is 31/12/2012. So she is making the first installment. So we are going to make the first installment. Now what they have given in the question? What is the first installment? So down and 3 installment of rupees 1,60,000, 1,20,000 and rupees 80. Now if you add all these, so here I have told you, if you add down payment 80,000 plus, so 3 installments, so which is the first installment? So first installment is 1,60,000. Second installment is how much? 1,20,000. And third installment is how much? 80,000. So if you add all these, how much you'll get? 4,40,000. So what does it mean? Whether it is inclusive of interest or exclusive of interest. So here, as I told, the cash price of the car is 4,40,000. Now Manjula is not going to give exact 4,40,000. So that is the principal amount along with interest. So along with interest is going to, or she is going to pay the installment amount. Now if you add all this, that is, this is down payment, and if you add all these installment, first, second and third installment, you'll get total of 4,40,000. It means what? It is exclusive of interest. If it is inclusive of interest, it should be more than 4,40,000. Then what it is? It is exclusive of interest. Clear? Now, then the amount what they have given as installment, that should be the principal amount. Clear? So here 1,60,000, 1,20,000 and 80 is what? It is principal amount. It is not installment amount. So they have told that has to be paid in 3 installments, but they have not given the installment amount. How did we find that it is not installment amount? Because it is not inclusive of interest. So it is exclusive of interest, right? So it doesn't include interest. So what it is? This is not installment amount. This is principal amount. Now go through the calculation. So the total amount payable is 3,60,000. We are going to make first payment at the end of the financial year 2012. So first principal amount is how much? So here they have given first year they are going to pay 1,60,000. Right in the principal column, 1,60,000. Now calculate the interest. So what is the amount payable in the first year? Amount payable in the first year is 3,60,000 into what is the percentage of interest? That is 9%. So how much you'll get? 32,400. Now if you had principal and interest, so how much you'll get? 1,92,400 as what? This is installment amount. So installment is equal to principal plus interest. So here principal is 1,60,000 plus interest 32,400. So installment amount is 1,92,400. Now time being we shall calculate till installment. Later we shall calculate the depreciation. Now come to the second year. So at the end of second year, they are making the payment. That is Manjula is making the payment. So end of second year is 31st/12/2013. We are going to make the second installment. Now, what is the amount payable at the end of second year? What is the amount payable in the second year? So in first year it was 3,60,000, out of which we have paid 1,60,000 as principal. Always we have to deduct the principal amount, not the installment amount. Clear? Because it is inclusive of interest, whereas principal is exclusive of interest. So less principal amount, that is which is paid in the previous year, 1,60,000. So the amount payable in the second year is how much? 2 lakh. Clear? The amount payable in the second year is 2 lakh. Now come to the principal. So here they have given, I have told you, this is principal amount, not the installment amount, because it is not inclusive of interest. Now take that principal 1,20,000. Now how to calculate interest? What is the amount payable in the second year? 2 lakh. So 2 lakh into what is the percentage of interest? 9%. So you'll get 18,000 interest. Now how to calculate installment? Principal plus interest. So principal plus interest is equal to installment. So when you add 1,20,000 plus 18,000, you'll get 1,38,000. Now come to the third year. So third year is 31st/12/2014. Now we are going to make the third installment. Now what is the amount payable in the third year? So here it was 2 lakh, out of which we have paid 1,20,000. So minus that principal amount. So we'll get 80,000 is the amount payable in the third year. Now we know the principal. What they have paid? 80,000. So write that amount. Next come to the interest. What is the amount payable in the third year? 80,000 into 9%. So I'll get 7,200. Now add this principal and interest. That is 80,000 plus 7,200 will get 87,200. So this is installment amount. Now clear about this table. If you are familiar with this table, it is very easy to record all the amount in your journal entries. Now what they have told, along with that, interest is 9%, but they have charged depreciation. So here the asset is in the hands of Manjula, because Manjula have purchased the asset, right? For that she has to charge the depreciation, and the depreciation is how much? 10% per annum. So depreciation is how much? 10% per annum, and they have clearly told that it is calculated on straight line method. So straight line method in the sense, each and every year the amount of depreciation remains same. Clear? And a written down value method, on the diminishing value we are going to calculate the depreciation. Now go through the calculation here. Now what is the actual value of the asset? 4,40,000. Upon that we have to calculate the depreciation. So 4,40,000 into 10%. So 10% is depreciation. First year 44,000. In the same way, since depreciation has to be calculated under straight line method, so the amount of depreciation remains same for every year. So second year also 4,40,000 into 10%, 44,000. Third year also 4,40,000 into 10%, 44,000. Now we are done with calculation of this table. Now we shall directly go to the journal entries. So we have to prepare journal entries in the books of hire purchaser. Who is a hire purchaser is? That is Manjula. So journal entries in the books of Srimati Manjula. Now what are the entries to be recorded? So your first entry is for what? She is a hire purchaser. So she is purchasing the asset. So first entry is for purchasing the asset. Next entry is for, so after purchasing she will make the down payment. That is on the date of delivery she makes the down payment. So second entry is for down payment. Third entry is for what? Interest due. So she has to pay the interest, right? So interest due. Fourth entry is for what? Installment paid. For whom? For to the hire seller. So installment paid. Next fifth entry is for what? Charging depreciation, because the asset is there in the hands of hire purchaser. So she has to charge the depreciation. Fifth entry is for charging depreciation. Sixth entry is for transfer of interest and depreciation to profit and loss account. So these are the 6 entries that has to be recorded in the books of hire purchaser. So first entry is for purchasing of asset, second entry is for making down payment, third entry is for interest due, fourth entry is for installment paid, fifth entry is for depreciation charged, sixth entry is for interest and depreciation transferred to profit and loss account. Now go through the first entry. So you know the format of journal: date, particular, ledger folio, debit and credit. Now when did we purchase the asset? When did Manjula purchase the asset? On 1/1/2012, right? If you see the question, the date is what? 1/1/2012. So for 3 years, so here the payment is made in 3 years. So first year is 2012, next is 13, next is 14. For these 3 years, we have to record the entries. Now go through the solution. So first entry is for what? Purchasing of asset. So 1/1/2012. So purchased asset. So which is asset here? Motor car. So motor car account data from whom she is purchasing? From the hire seller, right? So motor car account data to hire seller account being asset purchased on hire purchase system. So here for purchasing an asset, we have to record the entry. So what is the entry? Motor car account data to hire seller account. Now what is the amount she has paid, or what is the actual price of the motor car? So that is how much? That is cash price is 4,40,000. Record that 4,40,000. So first entry is for purchasing of motor car. Next, second entry. Second entry is for what? Making the down payment. She has paid some amount as down payment, right? For whom? For the hire seller. So hire seller account data to bank account. So 1/1/2012, same date, that is on the date of delivery of the asset, she is making the down payment. 1/1/2012, hire seller account to bank account being the down payment made. Now what is the down payment made? That is 80,000. Record that amount, 80,000. Now come to the end of that particular financial year. So here there are 4 entries: interest due, installment paid, then depreciation charge, transfer of interest and depreciation to profit and loss account. So your third entry takes place at the end of the financial year, 31/12/2012, interest due. So what is the entry? Interest account data to hire seller account. So here the interest has to be paid to hire seller, right? But we are not making the entry for interest paid. So here we are making entry for interest due. So what is the entry? Interest account data to hire seller account. Now what is first year interest? So we have already calculated how much? 32,400. So your entry will be interest account data to hire seller account being the first year interest due. How much? 32,400. Next, fourth entry is for installment paid. So what is the entry? Hire seller account data to bank account. So what is the installment paid? So first installment is how much? That is 1,92,400. So how to record? Hire seller account data to bank account being the first year installment paid, 1,92,400. Next entry is for what? Depreciation charged. So since I have told you the asset is there in the hands of hire purchaser, so she has to charge the depreciation. At the end of the first year, that is 31/12/2012, depreciation account data to asset. So here asset is motor car being depreciation charged. Now what is the depreciation? Go through the table. Here we have calculated the depreciation. How much? So what is the depreciation? So we have calculated depreciation of 10% under straight line method. So what is the depreciation? 44,000. Record that amount. So that is 44,000. Now we are done with recording the entry for depreciation. That is depreciation account data to motor car account, and the amount is how much? 44,000. Next, your last entry is that, so we have to transfer this depreciation and interest of the first year to profit and loss account. Now, if you see the entry for interest due, we have debited the interest. How much? 32,400. And depreciation also we have debited. How much? 44,000. Now, take this interest and depreciation and transfer to profit and loss account at the end of first year. That is 31/12/2012, profit and loss account data to interest account to depreciation account, being interest and depreciation transferred to profit and loss account. Now what is the first year interest? It is 32,400 and first year depreciation is 44,000. So record this 32,400 and 44,000, add these two, so I'll get 76,400. Now we are done with recording entries relating to first year. Now come to the second year. We don't have two entries, that is purchase of asset and making the down payment. So your entry starts from third entry, that is interest due. So what is the entry? Entry remains same. Interest account data to hire seller account, that is end of second year, 31/12/2013. Interest account data to hire seller account being the second year interest due. Now go through the amount. So what is second year interest? That is 18,000. Record that amount. So 18,000. Next entry is for what? Installment paid. That is end of second year, 31/12/2013. So when installment is paid, what is the entry? Hire seller account data to bank account being second year installment paid. Now what is the amount? So what is the amount we have paid in the second year? That is 1,38,000. Record that amount, 1,38,000, both in debit and credit side. Now next is for depreciation charged. So on the last day, that is on the end of the financial year, 31/12/2013, so depreciation charge, depreciation account data to motor car account being depreciation charge. So since we are calculating depreciation under straight line method, the amount of depreciation remains same. So here the depreciation is always 44,000. This is a case where only if the depreciation is charged on straight line method. Next, transfer this interest and depreciation of second year to profit and loss account. That is 31/12/2013. Transfer this interest and depreciation to profit and loss account. Now go through the interest of the second year. So what is the interest? That is 18,000. What is the depreciation? 44,000. So transfer that interest. This is not 60,000, it is 18,000 and this is 44,000. So add these two amounts, that is 18,000 and 44,000. So we'll get 62,000. To transfer this 62,000 to profit and loss account. Now we are done with recording entries relating to second year. Now come to the third year. At the end of third year, we have to record entries for interest due, installment paid, as well as depreciation charge and transfer of depreciation as well as interest to profit and loss account. Now come to the third year. End of third year is 31/12/2014. What is the entry for interest due? Interest account data to hire seller account being third year interest due. So being third year interest due. Now let us see what is the interest in the third year. So third year interest is how much? That is 7,200. Transfer this amount. That is 7,200. That is for interest due. Next entry is for what? Installment paid. So what is the entry? For whom we are paying the installment? For hired seller. So hired seller account data to bank account being third year installment paid. So being third year installment paid. Let us see what is the third year installment. So third year installment is how much? 87,200. So record that amount, 87,200. Next entry is for what? Depreciation charge. So 31/12/2014 depreciation account data to motor car account being depreciation charge. So your depreciation, as I told, since we are following straight line method, the amount of depreciation remains same for all the years. That is 44,000. Next, transfer that interest and depreciation to profit and loss account. So this is your last entry, 31/12/2014. What is the entry? Profit and loss account data to interest account to depreciation account. That is third year interest and depreciation has to be transferred to profit and loss account. Now go through third year interest. So third year interest is 7,200. Depreciation is 44,000. So write interest 7,200 and depreciation 44,000. Add these two items and write total amount, or total amount has to be transferred to profit and loss account. This is a very simple problem which is asked for 15 marks, where you have to prepare journal entries in the books of hire purchaser, and they have asked only for 3 years because the payment is made only in 3 installments, right? So this is a very easy problem. Only thing is that you have to know the journal entry and how to prepare that table which contains number of calculation, that is calculation of interest, principal, installment as well as depreciation. My dear students, we have come to the end of this unit, that is unit 3 hire purchase. See you all in my next session. Till then, take care. Thank you.